The mic drop. Meet Jenna, a professional and a mother of two who just purchased her new home last year. When her basement flooded in October, the repair bill was staggering and it left her short of Christmas money. One day while she was sitting in her living room, she saw this commercial.
Are your bills making your head hurt? Are you ready to beat the shit out of your children? Are you worried about what you're going to do for Christmas this year? Well, worry not. TBMB Title Loans. We got cash for you right here, right now. Cold, hard cash. Lowest rates in the industry. Got a car? Got a title? You can get cash today. Cold, hard cash.
We will not turn anybody away.
This weekend only. TBMB Title Loans.
Jenna thought, I have a car title. I wonder if a title loan is right for me. Stop. Before we go any further, I would like to make this disclaimer. I was the general manager in the business, a successful general manager, for 8 years, and I worked for a major player in the industry. I was the district sales trainer and a manager trainer. I actually trained my last district manager. I've seen nearly every aspect of the business, and it definitely deserves its respect. Look, everyone needs to borrow money. And at some point in time, whether you believe me or not, I would say that this is the rule. With this in mind, understand that everyone isn't creditworthy enough to borrow from the bank. So non-traditional means must be attained. In short, title loans or pawns can be beneficial, but you must know how you're going to get out of there before you even go in. Have an exit strategy. Now let's get back to Jenna, who has decided, for all intents and purposes, to go ahead with this process. So she grabs her car title, her keys, her vehicle, other documents, and she drives down to Big Mike's Title Loans. When she arrives, she's greeted by a friendly staff member, and she's offered a seat where she begins the application process. While she fills out the application, an employee goes to conduct a vehicle inspection for the appraisal. Once the vehicle is appraised, an offer is made. Sometimes people get offered more for their vehicle, sometimes people get offered less. I'll cover these different scenarios in other videos more in depth. For this video, let's just assume that Jenna got what she asked for, which was $1,000 to buy gifts for her daughters for this Christmas. Here are several things you need to look for. You need to look for the area of the contract that states truth in lending. Truth in lending. Look for those words on the contract. Next, you want to look for the principal amount, which is the amount borrowed. The next one, your monthly interest charges. Basically what they're charging you for the loan. And you want to look at the annual percentage rate. You also want to look at the terms of the contract. Every contract should have an end date. Every contract should have an end date. Every good contract should. So you always want to look and understand the terms, because this is where the wool gets pulled over people's eyes. So for this video, let's just say that the rate on $1,000 is 12.99%, which equals out to $129.90 monthly. That depends on the terms of the contract. For the purpose of this video, we will say that the contract matures every 30 days. which equals out to $4.33 per diem or per day. This is important, and we'll get back to that in a little bit. This is why you should have an exit strategy before you borrow against your vehicle title, especially if it's your primary vehicle. You definitely want to have an exit plan. The annual percentage rate for this particular contract is 155.88%. Yes, 155.88%. I repeat, 155.88%. And if that's your primary vehicle, these types of rates are dangerous. In order for Jenna to pay this loan back in 12 payments, she would need to pay on the first month $213.23. Take heed, this is why I'm saying the first month, which would take the $129.90 in interest and apply the remaining $83.33 to the principal, leaving a principal balance of $916.67. Now what you do is you take that number and you multiply it again by 12.99%, which would leave your monthly interest payment at $119.07. A good rule of thumb to follow when making this decision should be this. You should have at least 2 times the amount of the payment in disposable income. I repeat, 2 times the amount of the payment in disposable income. If you cannot swing it, don't do it. Now, what about this? Mike, I'm expecting a large payout, lawsuit, settlement of some sort. Okay. If you know that you can cover the loan in full with said large payout, and no, I'm not talking about income tax returns. Big mistake that my people make. Income tax returns are not dependable income. The IRS is far too finicky and shouldn't be trusted when it comes to your transportation to and from work. Overall, I would say avoid counting your eggs before they hatch. But if you got a surefire plan to get the money back in full, then yes, this can be a good tool for you. People look and be like, man, it's less than a credit card. It's less than a credit card. No, it's really not. For short-term purchases, yes, a title loan is better than a credit card. For short-term purchases, that means I'm paying it back next month. It's easy to fall into the materialistic trap during the Christmas season, but going into debt is not the jam. The old folks used to say the way you come into the new year is how you will end the new year. Going into debt before Christmas or going into debt for Christmas ensures that you'll enter the new year owing, and it's a vicious cycle. Title loans and payday loans are financial tools for high-risk individuals. If you're going to take the risk, make sure the reward is worth it. Make sure you have an exit strategy. Now, we'll be doing more videos on this, and I look forward to seeing you. This is your boy, Big Mike. I hope you find this useful. If you do, hit the like, share, and subscribe button. Hit the like, share, and subscribe button, and we'll see you next go. The Mike drop.